U.S. Bank investment analyst Jim Russell is joining us now with a bit of economic forecasting. And Jim, one of the things we talk about when you talk about economic forecasting, we've touched on it so many times, is stability in the markets. Markets love stability. Are we any further down that road to seeing any more stability in the markets?
Dan, it's a great question, and I think it's on everybody's mind right now. Really, we see the central risk for the markets right now coming out of Europe. There's a lot of turmoil there. There's a lot of indecision there. There's a lot of uncertainty. So I think the answer is maybe not just yet. The markets are a forward-looking mechanism and look maybe 6 to 9 months in advance. So really the markets are peering into the spring of 2012 at this point and maybe looking at a slower growth scenario globally.
So from a U.S. Bank perspective, what sort of things are you looking at?
There are a couple of specifics that we would like to point to today that we think play out in 2012. First of all, we do see that an uneven global slowdown and a variety of solutions to be applied. Here in the United States, we're probably going to try some stimulus. In Europe, they're probably going to try some cutbacks. Europe economic crisis has global linkages. That's what's slowing down the United States in part. Housing, we just mentioned just a minute ago some of the impressive housing numbers both nationally and Cincinnati. We think that remains problematic, though, on a national basis. Unemployment remains high. Consumer confidence probably remains a little bit on the low side as unemployment remains elevated. Interest rates do remain low, another plus for the housing market as just mentioned, and it does look like that Cincinnati's job situation will be continued to be tied to manufacturing strength, which we continue to believe will be a bright spot for the nation as a whole and Cincinnati in particular.
Yeah, the stock market took another beating this week, and we were talking about that before we got on camera.
Right.
But you know, can you balance that with what the stock market's doing, and then you look at some of the positive economic news that we've actually had on this show today?
Some of the economic news will be local, will be somewhat confined geographically to certain regions. Hooray for Cincinnati for getting some jobs. Hooray for some of the job numbers that we're seeing out there. But what I think is happening right this second is the United States, it's our call, will avert a recession in 2012, but slow growth I think will be the key as Europe continues to be a source of concern for global investors.
Yeah, you said no double-dip recession a few months ago, and you're sticking by it.
So far, so good there.
All right, Jim, good job.
Thank you.